YYC Group was established in 1974, founded by Mr. Yap Seong Fat and his wife. Initially, our office was located at Pudu, Kuala Lumpur. In early 2018, YYC HQ officially relocated to a 5-story building having more than 800 employees. Currently, YYC operates with branches across KL, Selangor, Johor and Penang. In 2019, they have also entered the Singapore market. YYC's business philosophy and excellent performance successfully catch the attention of OCBC Bank to invest and become the strategic partner.
为了把 YYC 推上另外一个高峰，我选择不再守，而是转型。对我来讲，转型就是不断的学习，不断的创新，带更好的元素进来自己的公司，然后把公司做得更好、更强。
YYC Group providing one-stop solution of professional services including accounting, tax, audit, business school, business advisory, etc. Through innovative transformation, we have trained more than 100,000 business owners and widely recognized by entrepreneurs from many industries. Today, YYC has over 20,000 clients.
YYC 不是只是一个会计公司，我们是一个企业医生。Your success is our success.
Yes, you can.
Hello everyone, I'm Amanda Andrea, your host for the Tax Made Easy talk show. Today is our final episode. Now, I was browsing through the internet the other day and I came upon this 2021 Tax Risk and Controversy Survey. It states that companies may experience new tax audits due to several pandemic-related tax issues. Now, that's very interesting to note, and one more interesting thing is that we're going to talk about it later on. Now, in relation to that, I'm really looking forward to this section with our speakers today, where we'll be diving into corporate tax audit and the challenges that SME or business owners face when dealing with tax audit issues. Let me introduce to you our main speaker once again for this series, tax guru from YYC, Chow.
Hi, good afternoon, everyone. Good afternoon, Amanda. Well, we meet again. Well, looks like this is the final episode of Tax Made Easy. And yes, I'm here again to share with you some insights on certain tax matters and certain tax issues. So I think those that have been following us will probably know who I am, but those who are joining us for the very first time, yes, let me just introduce myself. I'm Chow. I'm the executive director as well as the head of tax in YYC Group. Now I've been doing tax for more than 15 years right now. This is my 16th year. And whenever I tell people that, hey, I've been doing tax for so many years, some actually was stunned, saying that, hey, you sure, Zen? You don't look like you're so old, But the fact is that I'm actually not young, right? To be honest, because I've been in this industry for more than 15 years. And of course, what I've been doing, definitely income tax is my forte. I'm also a licensed tax agent, recognized by the Ministry of Finance. And when GST was first introduced, I was also, the first batch who got the GST agent license. But I always say that, now there's no GST. So this license is, some kind like not so useful. So yes, throughout all these 15 plus years, I've been doing all sorts of taxes, be it income tax, indirect tax, stamp duty, real property gains tax, etc., etc. Now, today I have a question for all of you. I'm bringing a question here for all participants today to also join and answer this. So I have these questions that I want to put up the poll, to ask everyone and see what is your opinion on this question, on tax audit letter. So the question is very simple. What's the first thing that you will do when you receive a tax audit letter? So choose one of these options over here. We will discuss this later. And so we'll talk about that. I'll pass this back to Amanda. Amanda, back to you.
Hi, Zen. Thank you for that. I was actually reading and it has the oh no, oh no, oh no. And that popular song on Instagram, that's where you got it from, right? Because I was literally singing that song in my head when that happened. So yeah, guys, we always have all these surveys, so it's really fun and interactive. For those of you who are watching, once again, thank you for watching. I see we have about 83 viewers already, so that's fantastic. I don't know exactly how many on Zoom, but guys, please feel free to comment, ask questions, because we will get to your questions later on. We're actually having a special section where we have Q&As that we're going to answer. Well, Zen and both of our guest speakers will be answering as well. As I was mentioning, with our guest speakers, we will be discussing the challenges faced by SMEs and business owners when it comes to tax audit. Today, for our final episode, we have Mr. Chin from SME Association of Malaysia, and also we have Ms. Ili, the committee member of PENIAGAWATI. Welcome both of you to the show. Thank you so much for being here. Of course, before we start, Mr. Chin, can you tell us a little bit about your background, perhaps? Oh, you're muted.
It's always the case. You ask me to start video, I start video, but I forgot to start mic.
No problem.
Okay, good afternoon, Amanda. Thank you for that introduction, and then thank you for the kind invitation to be here with all of you. We have a fine gentleman, Zen Chow, and also Miss Ili here. Nice to meet all of young fella, which I think very important. Today, we all belong to youngsters. No more people like us. You know, we are the monster.
Don't say that.
Okay, a little bit about myself. Yeah, currently I'm the National Vice President of SME Malaysia. I'm as well as the chair of the committee of SME main committee in Kuala Lumpur Chinese Chamber of Commerce, that's KLSCCI. As well, I run another association called Malaysia Cross-Border E-Commerce Association, which a lot of questions on cross-border, what they call withholding taxes and digital taxes. Probably will pass to Zen to answer later. As well as I'm also the past chairman of Persatuan Computer and Multimedia Malaysia. We call PCOM. If you guys remember, maybe you're still young, you don't go to PC fair.
We
we used to run to PC fair, and stuck there for hours, just to hunt for something important. So back to this, I am also a SME by myself, as well as I'm also a CEO of a listed company in the US. My company called Chee Venture. We do what you call technology assessment. We do incubation. We help companies to grow, mainly technology based into Southeast Asia region, and finally list them into US market. This is what we want the Malaysia company to foster, to go abroad. Malaysia is too small for all of us, right? Then we should move away to get more businesses, especially now with the economy being hit so much by the pandemic. And I think look at the number of cases, as well as not so much of cases alone. The economy is not allowed to open. Ministers say there are 7 million people losing jobs. We say there are 100,000 companies going to close down, which is fact. And this is very, very alarming, right? So we hope to have a good session with all of you. Any question we can ask, you can forward to me as well. Thank you. Thank you.
Thank you very much, Mr. Chin. Well, clearly we've brought out the big guns for our final episode. Now tell us a little bit about you, Miss Ili.
Hi, Amanda.
Hi.
Thank you so much for having me today. Hi to Mr. Chee, Mr. Zen. Okay, I'm so excited to be part of the session today. Basically, my name is Zawani Ismail. I'm also a womenpreneur. And education-wise, I have an accounting background. I'm an ACCA graduate. And business-wise, I am actually a sole distributor of an international brand, halal cosmetic and also personal care products from Istanbul, Turkey. And then basically I distribute it through various channels like big names like Ion Wellness, Pakson, Sogo, and online platforms like Lazada, Shopee, and Fashion Valley. And at the same time, I'm also actively involving myself in Women Association, for Womenpreneur Association. So basically, I would like to share a little bit today about my insight from our point of view about the tax issues today. Yeah, so basically that's about myself.
Thank you so much, Ms. Ili, and we're excited to actually learn more from your point of view as well. So before we actually begin right into the Q&A, so this session, Mr. Chin and Ms. Ili will actually be asking questions to Zen. So Zen is going to be grilled on these questions. But before we get into that, I just want to ask, this is like a generic question I would like for all our speakers to answer. How do we know which or what expenses are deductible in Malaysia? Mr. Chin, maybe you can start.
Very simple. I always ask my tax agent or my accountant. as a businessman, you don't have time to think so much. And every year change some of these deductible expenses. You know, what we do, we throw in our entertainment bill or our expenses bill. Please go and handle. All right, this is very basic for all the SMEs, and let the professional do the job. Right, it's how we build the economy. You can't do everything by yourself, right?
Yeah,
so I believe I roughly know something. You can claim certain amount, you know. Some you can only claim 50% in terms of tax reduction, whatever. Some you don't even have a choice, you know. So, how to remember? For me, I think I leave it to the profession.
Yeah, I think Zen is very happy to hear that. Miss Izzy, what do you think?
Okay, I'm going to share from the perspective of, in general, as a normal SME, how do we take it, what expenses are deductible and not. So based on our sharings among the entrepreneurs, basically to them, anything that is related to business expenses, everything is tax deductible. That is the general assumption of the expenses. But we do know that not all of the business expenses actually is tax deductible. It's two different things. But most of the SMEs out there is not aware about that. Some, in fact, from real experience, they even actually put in their personal expenses under the company account. So they deduct everything. So, you know, that is not right when it comes to tax calculation. And I'm sure Mr. Zen will share later in terms of the sections and whatnot. It will be added back, and you know. But I believe there is ways on how to make it tax deductible. You know, like putting it everything, all the personal expenses, and probably take the amount of salary, you know, as part of your salary, because salary is tax deductible. You know, those kind of things, and things like donation. Sometimes, you know, we do some charities, small amount and whatnot. But actually for business expenses, there's no issue. But under the tax calculation, it will be added back if it's unapproved donation, you know. So that is a little bit from my side, the sharing. Generally, especially Sdn Bhd, they would think any expenses, you know, they will lump sum in the company. So that's why I think we need the tax agent, you know, to actually assist us. And then when we do the submission, then we were like surprised. Oh, why is this not deductible? You know, why this is added back? Or how come I didn't know? And all these entertainment allowances, if it's not really specific to a certain client, it will be added back by 50%, you know, those kind of things. A lot of people actually are not aware about this. So I agree with Mr. Chin. We should actually put this to the, you know, leave it to the professionals.
Yep. Definitely. And professional, Mr. Zen, tell us what you think about this.
All right. Now, first of all, I think I like how Mr. Chin answered to this. You know, leave it to the professionals.
And Miss Illy
too. I think that's supposed to be the way. But well, I mean, having said that, yeah, even if you leave it to the professionals, I would always advise my clients, even my own clients, I would always advise them that you should know a little bit. You should understand a little bit about the deductibility, you know, of the expenses of which you have incurred, so that, you know, in case your tax agent is not competent enough, then you know something that they do not know. You know, you can tell them that, hey, I have learned this. You know, I have learned this before. I know this is deductible, so you don't try to tell me it's not deductible. You know, so I mean, at least you can learn a bit about that. But now, if I were just to be a little bit technical, I know we are not trying to be technical here, but if we were just to be a little bit technical, actually in the Income Tax Act itself, there is this section 33, 33, subsection 1. It's stated very clearly what kind of expenses is actually deductible. And if you have the chance to, you know, get a copy of the Income Tax Act and look at subsection 33 bracket 1, it does say that for an expense to be deductible, it has to be, you know, wholly and exclusively for the business, and it must be incurred in the production of gross income. And the way how I always explain it to the layman there would be, always think about this. If I spend this money, would this help me to get more income? Would this help me to generate more sales, more income? Now, if that would actually help you to generate more sales, more income, then it satisfies the definition of incurred in the production of gross income. But now, apart from section 33, you also have to be aware of another section, that's section 39, yeah? Because section 39 lists down all the prohibited expenses. That means that sometimes you may say, hey, I am incurring this expense. It is for my business. It is helping me to generate more income. But under section 39, in that listing, it says this is not deductible, then too bad, too bad. Even though if you satisfy Section 33, you do not satisfy Section 39 because Section 39 prohibits it. So only look at these two sections, then you really get a good idea, yeah, on whether your expenses would be deductible or not. But of course, I must agree with Miss Ailey. Yeah, most of you would say that, okay, if I have incurred certain expenses, as long as it is for business, this is for business purpose, it should be deductible. Yeah, somehow it should be deductible, but we have to take one step ahead to see whether it is incurred in the production of gross income. Yeah, so basically that is how you judge it. But of course, the best thing to do is ask your professionals. Yeah, ask the professionals whether this is deductible or not.
Most definitely. And I think everyone has agreed as well to, leave it to the professionals. Now, I think we're ready for our Q&A session. That was quite a good starter for everyone. Let's start with Mr. Chin. Can you tell us what would you like to ask Zen? What's your first question to him?
I always like this session, ask questions, because always answer questions. It's good, at least a professional here to tell us, right? Okay, my question number one. Okay. Most SMEs would like to outsource their accounting services. I mean, Malaysia especially, we have, they just want to make money, concentrate in doing sales, getting client, getting customer. So they always leave this to the third party and not willing to engage tax consultant, because by making more money, you will cut your costs, all right? So many of them only realize how serious when penalty or they pay or anything come, when especially our good friend for income tax department knock on the door. Hello, how are you? Can I see you? And they start get panic, right? So basically, what is your advice for SMEs that they are around us?
All right, I think this is how I would probably advise the SMEs. Now, I totally agree with SMEs that cost is definitely something that they have to always look at. Yeah, cost savings. There's a saying. The more cost you save, the more income you make. It turns back to income. A penny saved is a penny earned, right? So, but when it comes to technical things like what we have discussed earlier, like what kind of expenses are deductible. Seriously, it is not something that's so straightforward, because we always have to look into the law. Yeah, we always have to look into the law, and sometimes somehow you'll be surprised. You think this is an expenditure incurred for your business, but your tax agent will tell you, unfortunately, according to the Income Tax Act, this is not deductible. So you'll be caught, surprised. So if you, only rely on your own understanding, well, you are outsourcing it to an accountant. But if your accountant is not well versed with the tax law, you'll be caught surprised when an audit comes. And at that time, when you realize that you have done a mistake, it's probably too late. Because when you realize that you have done a mistake, penalty is being imposed already on the wrongdoing. So my advice to a lot of people out there is that there is some money that you cannot save. Because let me tell you, that small amount of professional fee that you probably incur getting a professional to get the work done, in turn, right, you probably get to save even more tax, and you probably even get to save even more money, because there's probably no penalty being imposed, when an audit comes. So I would say, certain money has to be spent. Yeah, when it has to be spent, it has to be spent.
I definitely agree with that for sure. Miss Illy, what about you? How about your question to Zen?
Okay, Zen, basically most entrepreneurs, just like Mr. Chin, we want to pay as little as possible when it comes to tax, tax expenses. So what are the legit way, because we want to do it the right way. So what are the legit way to reduce company taxes?
All right, now, I always say that we should pay the correct amount of tax, not a single cent more, not a single cent less. Yeah, we want to pay the most accurate tax. But of course, there are ways to actually pay less tax. Yeah, there are ways to pay less tax. If you really look into if there's any tax incentive available. Governments have been giving out a lot of different tax incentives. There could be double deductions. There could be additional allowances given to you when you spend on certain things. So what I would advise, all the people out there is that you have to, keep yourself abreast to all the latest tax development. Know what are the incentives that are available, especially to your industry, because there are certain incentives that are given maybe to manufacturers. There are some incentives that are given to exporters. So if you know that, I'm actually able to apply for this kind of incentive or use this kind of incentive to make me pay less tax, that would be the most legit way to save tax, because knowing this tax incentive against not knowing it, will make a big difference. One person who does the same business with another person, one person knows that he can claim certain incentive, the other one doesn't know it. They may be making the same amount of profit, but one may be paying less tax, another one will be paying more tax. So make good use of the incentive that's available. Know what are the things that you can claim so that you can pay less tax legitimately.
Right. Thank you very much, Zen.
Thanks,
We have
Zen.
an audience question. This one's interesting. Let me read it to you. Zen, can you please explain more in capital allowance treatment for purchasing of company assets? We understand that IRB allows some tax deduction for fixed assets. Thank you.
All right, okay. Let me just explain about this deduction available for purchasing of fixed asset. Now, those who are doing accounting would probably know if you buy a fixed asset, in accounting, you have to do this thing called depreciation. Now, unfortunately, from tax point of view, depreciation is non-tax deductible. Why? Because it's not a cash item. It's a non-cash item. You see, you purchase an asset, you don't actually spend money thereafter, right? You don't actually fork out money every year. Well, it is just depreciating the value of the asset, and it is just an accounting entry. Therefore, that is not deductible. So you may say, hey, I've spent so much money buying an asset, and now you're telling me the depreciation is not allowable. Therefore, the Inland Revenue Board is giving you a capital allowance, which is similar to depreciation, which means if you have spent on a fixed asset, every year you get a certain percentage on the value, on the cost of the fixed asset to be given to you as an allowance deductible against your income and it reduces your tax. But while it means you don't actually get like 100% of the whole cost as deduction for the first year, because capital allowance has different rates depending on what types of assets you're buying. So you get a certain percentage every year, and slowly you'll be claiming this until you fully claim the whole cost, 100% of the cost of the asset. So that is the whole concept of capital allowance.
Okay, wow, that is very thorough. Thank you very much, Zen. And it's back to Mr. Chin. What's your next question for Zen? Give him a hard one, okay? Like throw him a curveball. Mr. Chin, over to you.
I've been laggy here. I don't know
Oh,
whether
no.
my side or your. Yeah.
Yeah, we
So,
can.
okay, can you hear me?
Yes, we can hear you just fine.
Okay. So I go for question number 2. Okay. This is a very important question because I personally pay a lot of withholding tax way back 10, 15 years ago when I started online games. I don't know you guys play online games or not. If you play, you will never forget what is O2 Jam, what is RO online. So those are the things I do. So when you do all these games, you are paying royalties, and license fees towards the party that you license from, right? So there are a lot of mistakes that SME makes. They do not have any knowledge about this. So what do you think then? How can they prevent from this and to get into trouble of this non-compliance or whatsoever? What is your advice for them?
On withholding tax, right?
Right, withholding tax.
Yeah, maybe I'll just start off by explaining a little bit, what is withholding tax to a lot of audiences here, because some of you may have heard about withholding tax, but not knowing what exactly it is. Now, to make things very simple, withholding tax here, it's actually the tax that should be paid by a non-resident. Now, I mean, we always say non-resident is foreigner, but of course that's not equivalent, but most of the foreigners would be non-resident. So you see, the concept is that if you use a foreigner's service, a non-resident's service, now they are earning money from Malaysia. They are supposed to pay tax in Malaysia, but it's hard to control. Because imagine, let's say, if a professional consultant from overseas comes into Malaysia, perform a service here in Malaysia to you, and you pay him a service fee, he may probably just take that money and then just go back, yeah? And after that, how does he pay tax? How does the government of Malaysia actually make sure he pays tax? So that is when withholding tax comes into play. Withholding tax is the tax on that non-resident, that foreigner, but the responsibility lies with the payer, which is you, the Malaysian, who uses his service. So what you're supposed to do basically is, before you even pay him in full, you're supposed to deduct a certain amount, and that amount, right, it's the withholding tax, which you should pay to the Inland Revenue Board, and the balance is to be paid to the foreigner. That's the whole concept of withholding tax. Now, but the problem here is that a lot of SMEs, and a lot of businessmen out there would tell me, I'm not able to deduct that withholding tax because this professional tells me, hey, I'm charging you this, you have to pay me in full. You can't deduct any single cent. So what happened? If I can't deduct any single cent, now, if you don't comply with the withholding tax, you don't get deduction for that whole professional fees. So it goes back to, I am supposed to even pay from my own pocket that withholding tax to the Inland Revenue Board, well, even if I pay in full to the foreigner. And that only makes me comply to the withholding tax. So a lot of people do not know that. A lot of people thought that, hey, if he doesn't allow me to deduct, I might just don't deduct. Or, they don't even know that certain services are subject to withholding tax. Therefore, they did not deduct the withholding tax. And that would cause the whole professional fee or the service fee charged by the foreigner non-deductible, not tax deductible anymore. So this would be the very common mistakes that we have seen. They do not know, they are not aware of this existence of withholding tax, hence they did not do the withholding tax part.
Okay, interesting. Mr. Chin, are you happy with that answer? Has Zen answered you correct?
I pay a lot of withholding tax, I know. If you don't pay, then you get yourself into trouble. I think, do we have any other country that we have trade what do you call, agreement that we don't have to pay any withholding tax?
Now, Malaysia actually signed a lot of double tax agreements, double tax agreements or double tax treaties with a lot of countries. But the point here is that signing double tax agreements does not mean that you don't have to pay withholding tax. It only means you may be able to pay a lower rate. You may not need to pay the default rate. You may be able to pay a lower rate depending on what is agreed between Malaysia and the other country. So always have to check the DTA, the double tax agreement between Malaysia and the other country, when you deal with a foreigner from that country.
That's why I say leave it to the professional. How to remember how to know how to do what tax,
Good to know the basics, but yes, as Mr. Chin said, just leave it to the professionals. Well, that's why we're here, right, today. Now, Miss Illy, what's your next question for Zen?
Okay, Zen, could you share a big no-no for the company or especially SMEs, for them not to do a big no-no for them so that it will make the tax process smoother or, the IRB won't be so hard on them because they don't have a lot of things. Yeah, probably you can share something.
All right, I would say the biggest no-no that everyone out there should not do, is that do not try to be not cooperative with the Inland Revenue Board. A lot of people will try to say, there's always this saying, especially I've heard SMEs telling me that, hey, you know what, the Inland Revenue Board comes and audit me, let's give them a hard time. They ask for this, don't give them that. They ask for this question, don't answer that. That is a big no-no. Please never do that. You know why? Inland Revenue Board officers are human beings too. I come to perform my job, I come and do audit, I expect full cooperation from you. If you cooperate with me, if you tell me whatever I need to know, then everything is smooth. But if you're trying to just put a lot of obstacles, a lot of hurdles, when they come and do an audit, that is going to make their life tough, and they will make your life tough as well. Trust me, if you make their life tough, they are going to make your life tough. So I always say, be very cooperative. Tell the truth, tell the truth. If they request for information, if they request for documentation, just prepare accordingly. Of course, if you really do not have that, or if you really do not understand certain things, you can just tell them honestly, I'm sorry, I really do not have this, or I really do not understand. Or if you are facing certain things that you're not sure, you can always tell them, can I check with my accountant? Can I check with my tax agent on this before I get back to you? You can always say that. Just be courteous, but do not ever try to say, oh, I do know this. Go find yourself. I do not know. Just don't ask me. That is a big no-no. So full cooperation is really needed. Whenever it comes to audit.
All right. Thanks.
All right. So basically, be nice, and then be treated nicely as well. Fantastic. I think it's funny, but also very true. I actually have friends that have told me that they're going to give the IRB a hard time, and I'm like, are you sure you want to do that? It sounds a bit risky, but yeah, I get what you mean, because it's frustration on both sides, and the IRB is just doing their job at the end of the day. They're not doing it for fun. They're doing it because they're paid to do it.
And I do know some try to avoid because they get panicked unnecessarily. Sometimes they don't even know whether they did any mistake. Maybe they have not, but they get panicked the moment they hear about IRB or tax.
Yeah. Yeah, it ensues that 3 letters actually ensues panic. I realized that as well. We have an audience question that's for everyone. I'm going to read it now. Okay, and I think everyone can just put their thoughts in it maybe. We can start off with Zen. But the question is it better to declare the profit of a company as dividends or channel, or should they channel the profit to the salary to the owner of the company during the tax planning? Okay, I'm going to just repeat that again. Is it better to declare the profit of a company as dividends or channel the profit to the salary of the owner of the company during tax planning? Okay, Zen, what do you think?
All right, now this really requires a simulation. Now, why do I say that? Because if you channel it as a salary to the owner, that means this becomes an income of an individual. Yes. We all know that individual tax rate is different than a company's tax rate. Yeah. Now, if you don't channel it as a salary, you leave it in the company, let the company has more profit, and then pay tax and issue dividend, that means you are actually leaving the profit for the company to pay tax. So we always have to do a comparison on whether after you put in the salary to the individual, how much tax would that individual pay? If that individual is going to pay even more tax than leaving it in the company, well, then why do you want to channel it into a salary? Just leave it into the company, let the company make money. And if that individual is also the shareholders of the company can just distribute dividend to the shareholders. And some of you may not know, dividend right now is actually exempted from tax because we are actually practicing the single tier dividend system. So dividends issued to the shareholders are actually exempted. But if you say, well, the individual is not earning a lot, the individual's tax rate is actually lower, well, then maybe you want to, pay more salary to that individual, let the individual pay the tax, and then, you will see an advantage from here. So it really depends on the situation, and you probably need to do a simulation, a comparison before you decide whether you want to leave it in the company or bring it to the individual.
Okay, well, for this question, Mr. Chin, do you have, what is your experience on this? What's your opinion on this? You've muted yourself.
I mean, most people want to take back some money, which is a fact, right?
Yeah.
But taking a form of salary is not a good idea for me as a businessman. Okay, you know why? You never know your business will go until when. One day you may want to decide to sell your company, right? Then when you want to sell your company, you look at your corporate governance, you look at how you manage your company. And you're a person who will take money out of based on salary, they may think that you are not an entrepreneur, kind of stuff. And that's no good on your books as well. And after all, it's tax deductible, like you say, why not we pay dividends? It's very simple as that, right? I still prefer, if you need to take money back, take it as dividend. If not, keep in the company. Nothing wrong to keep there. It's still your money if you are the major shareholder, right?
Yeah. Ms. Illy, what do you think?
Yeah, I personally prefer to put it as a dividend, give away as a dividend, because like Zen said, it is not taxable. So, don't take it as a salary, but go by way of dividend. That's better.
Yeah. Well, I think both of you have put in some really, really great input. And for for the person who actually asked that, I hope that this answers your question. And it's back to Mr. Chin again. What is your final question for Zen?
Yeah, just come back to the question that we have not finished when the tax officer calling on you. So there's two kinds, right? The other one is ask you come and see me, I give you coffee. Or I go to your office, you will let me have some coffee, Which one you prefer, right? But when you got this kind of call, I have experience before, which I managed, no issue, 10, 15 years back. But I don't know, some of you, new entrepreneur, they may face, like say, panic, don't know what to do. So then what do you advise them to prepare, to make sure, when they come over, because they give you time. They won't come, I call you today, tomorrow you come, Normally they give you time. So
that's true.
What do you suggest?
Now, just like what Mr. Chin said, before the Inland Revenue Board officer actually even come to your office premises, they will actually send you a letter. Yeah, they'll send you a letter. They will give you time, at least 14 days for you to prepare yourself. And in that letter itself, it does state, what are the documents that you should prepare. Yeah, so you've got to make good use of this time, this 14 days for you to prepare whatever documents that, the Inland Revenue Board is requesting you for. So do not just, let them come and you are unprepared, because that means you are not cooperating. You're not cooperative enough. So prepare whatever documentations that they need. Of course, if the Inland Revenue Officer does, specifically request for certain sensitive documents, certain documents that they ask you to prepare, you may want to check with your tax agent. Now, you may want to check your tax agent and say, hey, now the Inland Revenue Board is asking specifically for this documentation. Is there something wrong? Let your tax agent, let your accountant have a look, at your documents and see if there is something that you need to be prepared to answer. Because it's always good to be prepared to answer to certain questions or anticipate what kind of questions that they could be asking you. Yeah, these are the things that I would always ask my client to prepare. But of course, last but not least, I would say always, check with your professionals, check with the tax agents. Yeah, if you need any help, if you need help, get them to do a meeting with you before you even meet the officer to tell you about the exposures that you probably will be facing. Yeah, so that would be my advice.
Thank you very much, Mr. Chin, for your final question. And Ms. Ili, what's your final question to Zen?
Zen, can I ask about, other than tips for SME, I always hear that some people say the more tax you pay as an individual, the bank like you more. You are more bankable or likable, and they would look for you more and would be willing to give you a bigger loan amount. Could you share a bit more on that? Is that true, or is it just a myth?
Well, I would say it's somehow true. Yes, it's somehow true. Why? Because if you pay more tax, that means you make more profit, because usually you pay more tax only when you make more profit, right? So if you pay more tax, that means you're making more profit. The bank definitely knows that you can make more money. Now, when you make a lot of money, the bank is definitely more willing, to loan you more money. This is something I always say. People who wants to loan money, right, are those that do not have enough money, right? But it's so ironic that bank would always lend money to people who have already a lot of money, who already have a lot of money. Then they will say, I'll lend you more, right? This is always the case. But I would say it's somehow true that if you make a lot of profit, and you have to pay a lot of tax, the bank is definitely gonna see that, hey, that means the repayability, the capability of paying back your loan is definitely higher. So they are more willing to lend you more money, and even a larger amount or better terms. So yeah, I would say it's somehow true, even though not entirely true, but somehow true.
And then just to add on that, some even say, for instance, I'm paying, let's say, 120,000 amount of tax, on daily basis, for example. Then they were saying that, how the bank would calculate it is like 120,000 times 10 or times 20. That is the amount or the ceiling amount that actually you can take in terms of your loan liabilities or not. Is there any such formulation, or it actually varies from bank to bank? Do you know about that?
Now, as far as I know, the bank will not take the tax amount and multiply it by certain number and to determine how much they are gonna lend to you. I think that's probably a myth. Yeah, that's not true, okay. I suppose, because what the bank always look at is the capability of you paying back. So they will look at how much money you make, what is the cash flow projection that you probably have every month, and they will see, okay, if you can actually pay back this amount of money every month, if I loan this amount to you and the payment terms is as such, now you will be able to serve the loan, and that is how they determine if they could lend it to you or not. So seriously, I've not heard about taking the tax amount and multiply it with a number to determine how much to loan to you.
Okay, thanks, Zen.
All right, thank you very much, Zen. Before we go into, we have quite a lot of questions now, so I'm really happy about that. Lots of it to Zen, but we have one from Miss Ili. So Miss Ili, I would like to ask you a question. This is from Rosley. He's asking, Miss Ili, we can see mushrooming, okay, sorry, the text just went up. We can see mushrooming of personal shoppers now. I wonder, how do they do their tax, since I'm quite concerned of how they do, assuming some of them are under your patronage?
Okay, can I answer that now, Amanda?
Yes.
Okay, in the real world, a lot of people, when they become a personal shopper, it's merely just to become, to earn income. They do not know their full responsibility that they have to pay certain taxes and whatnot. All they concern is, you know, I need some income to do for my cost of living and whatnot. Okay, but then that is where associations like us, PENIAGAWATI, and tax agents like YYC Group, the professional, they have to advise these people. And most of them actually do it on individual basis. But then, you know, we have to encourage them to probably register an enterprise, or probably Sendirian Berhad. They have to understand what's the difference, and then what's the advantages if you register as Sendirian Berhad and enterprises. And if it's enterprises, you have to submit a different B form, I think, right? Then if during the tax, you have to combine, you know, all these kind of things. But a lot of people in the real world is not doing that, to be honest, Encik Rosli. Okay, so this is where associations like us have to have a lot of sessions like this, trainings like this, to actually educate them that they need to do this, they need to submit all this tax competition and so on. That is something that I can share with you from what I observe and from what I've experienced, you know, when I mix around with all the rest of all these small entrepreneurs. Yeah.
Thank you, Ms. Ili. And also a question to Mr. Chin from Pang Mi. How does our taxes at Hasil help the needy people or the rakyat, especially in terms of this COVID-19 pandemic? Oh, that's an interesting one. I'd like to know as well.
What kind of tax again? I missed that question.
So how do, you know, our taxes in general at Hasil, how does it help the needy people or the rakyat, especially during this COVID-19 pandemic? What do you think?
When you contribute or you put out some charity, you know, and do you expect to get tax deduction or
No. I think the person is asking when they pay for taxes, and apparently, you know, the taxes is to help the government, to help the people. How do you think it is able to help the needy people, you know, the rakyat, when we pay taxes? I think that's the question.
I think it's very simple. The government incomes come from where? Mainly. Right? And they had to pay a lot of other expenses, be it development, be it the salary of the government workers, you know, be it for the needy, like what happened now, you know, they buy vaccine to support us, you know. And of course, this is where our rakyat should have our responsibility, right? If you don't pay tax, if you don't declare tax, like I say, you may not be bankable. Sometimes you cannot even take loan, you cannot even buy a house, you cannot buy property. But let's put the fact aside of your personal self-interest. But look at it in general. When you are able to make profit, you are able to make money. It's best that you pay more tax, right? Of course, you want the bracket of tax is lower because if you are going to increase the tax of personal tax, then you have to reduce the tax of corporate tax, or the other way around, you know. So what we expect is that as a good rakyat, we all must pay tax. That is their wise. Don't just hide your figure, you know, make some money out of yourself, and then you try to keep it somewhere, because eventually it's going to come out anyway, you know. So my thought is government are elected by us to go and do what they are supposed to do, right? They are elected, so they have parliament sitting coming up, okay. So to you know, to debate and how to make use of the money that get it from the rakyat. And if you do without money, without taxes, then it's difficult for the country to move along, right?
Yeah, most definitely. Thank you, Mr. Chen. Now, Zen, we have also another another question. For withholding tax, what about the applications that we bought through app stores or Google stores, like Evernote, for example, or even storage applications like, you know, Google Drive? Sometimes you have to pay extra for it if you want a bigger storage, or Dropbox. Do we require to pay the withholding tax, and how do we pay it?
All right, now this is pretty technical, I must say, yeah, because a lot of people have confusion on this withholding tax whenever they use this kind of services, you know, like Dropbox, like what else just now you were saying, Dropbox, Google Drive, Evernote, you know, things like that. So a lot of people have confusion on, is this subject to withholding tax? Now, let me just first explain to you why would people say that these kind of services could be subject to withholding tax. That's because the definition of royalty in our Income Tax Act has been amended. It has been amended, and it has been amended to now to include usage of software. It's actually considered as payment of royalty. That means if you pay money and you get to use the software, That's called royalty, and royalty is subject to withholding tax. So we always have to fall back to the basic. Are you paying these people like Google or Evernote or whatsoever? Are you paying for using a software? If you say, I pay and I get to use a software, and the software can be very wide, it includes if I'm able to just log into a platform, to use the platform to control certain things, that's actually using a software, yeah, because you log into the platform, that platform is a software, yeah. So if you are paying just because you can get to use the software, then that's royalty, and of course that will be withholding tax. But if you say I'm paying the money to overseas, but I don't get to use any software at all, yeah, I don't get to use the software at all, yeah, that is not royalty. So it doesn't mean that every time when you pay an overseas service provider, that will be, tantamount to having to deduct withholding tax. Not really. So you got to really look at the fact of the case. Of course, over here, as I'm not seeing the facts of the case, I can't comment much, but do bring this up to maybe your tax agent or to your whatever consultant that you have, brainstorm this with them and let them look at the contract, look at the service contract that you have to see if there is any element of usage of software. If there is, then yes, withholding tax comes into play. If there is no usage of software, then well, there's no withholding tax.
Right, thank you very much, Sen. Now we have quite a lot of questions. I'm going to get a simple one, a short one, not to say simple, but a short one. I think it's short lah, okay? What is the tax impact on a director for taking a loan from the company?
Okay, do you want me to answer to that?
Sure, Zen.
Right.
Is this a short one? I thought it is.
Okay, now, director taking loan from the company, yeah? Now, I know many directors or many companies will be giving interest-free loan to the director. Now, and that is also something that I would not advise. Why? Because if the director takes a loan from the company, that means the director is owing money to the company. Now, according to the Income Tax Act again, yeah, there is now this thing called deemed interest. Now, what is deemed interest? Yeah. It means here, if the company lends money to the director, the company is supposed to charge interest to the director. If you don't charge, it's okay. When the Inland Revenue, when we do the tax computation, we have to treat it as if the company has charged an interest. There is a deem, an interest income in the company's account, and the company then has to pay more tax. Yeah. So this is the provision in the Income Tax Act already. So I would say, no, might as well just charge an interest to the director if you give a loan to the director. So many people would ask me then, what kind of interest rate should I use? Yeah, what I would just advise, I would just suggest that most companies will probably use the average lending rate of a commercial bank, because that is the rate that the Inland Revenue Board would use as well when they calculate the deemed interest. So you can use the average lending rate of a commercial bank to charge interest on the loan that you give to the director.
Interesting, thank you. Now we have another question for everyone to answer. This is from FW Chan. When an owner makes a cash withdrawal from the profit earned in the business, does it affect the tax incurred to the company, whether it's an increase or decreased tax? In such cases, is the cash withdrawal considered as the owner's personal income and subject to his personal income tax? What do you think?
Okay. I think I'll be the best person answering to this, isn't it?
Okay, sure.
I don't know. I mean, Miss Ely and Mr. Chin can also chip in. Yeah, I mean, both of them can chip in later. I'll just make a very simple comment. Yeah, when we talk about cash withdrawal from the profits earned in the business, first you got to understand whether you are withdrawing cash from your own sole proprietorship, or are you trying to withdraw money from the profit of a Sendirian Berhad? Because they are two different things. Yeah, Sendirian Berhad, it's a separate legal entity. So like what Mr. Chin and Ms. Ely was saying, we always prefer, dividends to be issued by a Sendirian Berhad. So if you say, well, I just want to take some profit from the company, from the Sendirian Berhad, and if they actually distribute by way of dividend, then there will be no tax impact because the dividend is not taxable. Yeah. But if you're drawing it from a sole proprietorship, then again, this is only drawing money in your own business. That is not an expense. That's not an expense to the business. Yeah, it only means that you're drawing money from the company for your own use. Again, that is not an expense to the business. There's no tax impact to the business, but and also for the personal, for the individual, if you take money, well, that's just some withdrawal of money, and that is not an income. That's not an income as well. Yeah, so that will be no tax impact as well. So it really depends on whether you're drawing from a sole proprietorship or are you distributing dividend from a Sdn Bhd.
Yes. Thank you very much, Zen. We have a next question for you, and this is from Lee Ling Vun. Okay, Ms. Lee Ling Vun, Lee Ling Vun has actually joined us from the first episode as well. This question is a little bit long, so bear with me. Okay, in this person's understanding, 10% should be deducted if the consultant is doing work in Malaysia. If a consultant is doing work outside Malaysia, such as doing market research work in Singapore, I don't think it's necessary to deduct 10%. She gives a scenario as well. If Home hires a business consultant in the USA and the business consultant lives in the USA, when Home pays the consultant, do you need to deduct the 10% and only pay US $4,005? What about if this is in Singapore? What about the double taxation agreement between Malaysia and Singapore? Zen, this question is solely for you. I hope you got all of that.
Yeah, I'm also reading the question, posted by Lee Ling Vun.
Fantastic.
I'm reading that. Yeah, but let me just answer it like very briefly. Actually, it's simple. I think her, I don't know whether it's a she or he, okay, but anyway, Lee Ling Vun's understanding is right. Yeah, it's right. Because if you use a consultant, and if the consultant is not doing the work in Malaysia, if the consultant is doing the work outside Malaysia, there is an exemption on withholding tax. Yeah, that means if the service is not performed in Malaysia, performed overseas, this service would not be subject to withholding tax. Yeah, that means withholding tax would only happen when it comes to services rendered and when this service is rendered in Malaysia, when it's performed in Malaysia. So when I look at the question over here, this person gives a scenario, and of course it says that the consultant lives in the USA, and the consultant is actually doing the work. Everything is in USA. Now, if that is the case, then, well, the work is performed overseas. There will be no withholding tax because it's exempted from withholding tax. But please make sure that this consultant does not come into Malaysia, does not perform the work in Malaysia, because if it does, then there will be withholding tax already. Now, same rule applies to Singapore. Same rules apply to Singapore as well. Even if this consultant is a Singaporean, same rules apply. If the work is done in Singapore, no withholding tax. If it's done in Malaysia, then yes, there will be withholding tax.
Fantastic. Thank you so much for that, Zen. All right, from Ganesan Murugesu to Mr. Chin and Miss Ili. Based on a loan to directors, if the loan is given out of loan from the bank, does the company still need to charge interest to the directors? Mr. Chin, what do you think?
Loan from the bank to the director. It's not to the company, right?
No, let me read this again. Based on the loan to director, if the loan is given out from the bank, the loan is given out from...
Who's taking the loan? Who's taking the loan?
Director.
Director. Is director nothing to do with the company?
Okay.
That will be advanced to the company, right?
Yeah, so I'll just read this question again for everyone to hear. Based on a loan to a director, if the loan is given out from the bank, does the company still need to charge interest to the directors? No, right?
I think I roughly know what it means. I think what Ganesan is trying to ask here is that the company is taking a loan from the bank, and this company is using the loan taken from the bank and now loan it back to the director. So does the company need to charge the director interest now? Because the loan is given from a loan taken out from the bank.
Yes.
If that's the case, you still have to pay. You still have to charge interest according to the taxation law. Right?
But actually, most of the bank would have that clause inside the agreement that does not allow the company to actually use the money to, for the directors to actually take it out of the company, if I'm not mistaken. Usually, because to protect the money is for the growth, business growth, not for the personal use of the director. Usually, there will be a clause on that. Yeah.
Yes, but sometimes the director just pick it up. Bank will never know. It's very common, right? And bank have no way to check,
Yeah,
So,
but the interest is still
anything
chargeable.
go up from the company to any director, you have to charge interest. That's it, right?
Yeah.
Then
Now I would say, yeah, because the deemed interest provision is there. You know, when you give a loan to a director, even if you don't charge interest, the deemed interest provision would be there. But of course, if I can just be a little bit more technical, deemed interest is charged when the money lent to the director is from internal funds. So I think what this audience is trying to say that, hey, I'm now using external fund. I'm using external fund to be loaned to the director. So do I still have to charge interest? Now, of course, if you say you don't charge interest because this is external fund, then there will be another issue. The issue is called interest restriction. Now, the whole concept of interest restriction is simple. That means the interest expense that you pay to the bank because you take the loan from the bank, it's not deductible anymore, because you are not using it for your business anymore. You see, go back to the simple rule, you know, section 33 that I was saying, you can only get deduction if the expense is incurred in the production of gross income. Now you take loan from the bank, it's not even for your business, you go and lend it back to your director, the interest expense is not deductible anymore. But if you charge interest, then you have an interest income and you have this interest expense, that is deductible. You can set it off against the interest income that you charge, you know, to your director.
Well, is the company allowed to give a loan to its own director? It apparently used to be an offense under Company Act 1965, according to Surdev Singh.
Now, of course, you see, like what Mr. Chin was saying, right? Or Miss Ely was saying, you know, there's sometimes some rules that say that, hey, the company cannot simply give out a loan to a director. Yeah, maybe the constitution doesn't allow that, you know, or if the purpose of the loan is not really to be given out, you know, it's for your own business, then you're not supposed to give out. So that's really, we have to fall back. Yeah, we have to fall back to the constitution of the company or the memorandum and articles of the company.
All right, thank you so much for that, Zen. Now, maybe this is a quick question for you to answer, I'm not sure. If a company presents a 5-year service gift to a staff below 2,000 ringgit, is it considered taxable prerequisite?
Whoa, 5-year service gift to staff. Yeah, okay, now, I think this audience is trying to ask if the staff who received the gift, would it be taxable? Would it be a taxable perquisite? Now, actually for staff, if you receive any gift from the company, there will be exemption. There will be exemption, but you have to fulfill certain criteria. Like for example, long service award. Long service award is actually exempted, but long service award means you have to work for at least 10 years. 10 years with the employer. So if this is only a 5-year gift, it doesn't qualify for that long service award. Of course, there are some other awards like excellence award, you know, or some kind of there are a few more awards like that you can actually look into the exemption. Now, I would say if you fulfill the condition of that exemption for certain awards, then yes, you could get an exemption, yeah, up to 2,000 ringgit. But if you don't fulfill the exemption, then you don't get the exemption. I mean, if you don't fulfill the criteria, then you don't get the exemption. So I'm assuming that if this person is trying to call that 5-year gift a long service award, well, then you don't get the exemption because long service award, 10 years. Yeah, you need to work for 10 years.
All right, thank you very much, Zen. Well, it is 3:57. We have time for only one more question. Actually, we do not have time, so I'm just making time for that final question. For those of you who are answering on Zoom, who are asking on Zoom and on Facebook, thank you so much. We're really happy to see all the answers come through. Now, we do not have time, obviously, to answer all of the questions after this final one. So do know that we're actually going to get back to you as well. So keep your questions. We will be getting back to you. The team, Malaysia Kini team, will actually get back to you later, whether it's email or answering you on Facebook or on Zoom. They will definitely get back to you. Okay, our last question. For an overseas purchase of e-standards, I'm not sure what e-standards are, but there's a bracket, PDF, ISO related. Does this fall under the royalty scope of withholding tax or digital service tax? Zen, over to you.
Now, obviously, when I look at e-standards, it says PDF, ISO related. Now, of course, I must be very honest, I do not really know what is this e-standards, but back to basic, royalty, right? It's very wide. Yeah, if you use a license, you know, you get to use the right, you got to use a trademark and things like that. That's payment of royalty, including usage of software. So we have to go back and see whether you get to use certain license, trademark, rights, or even usage of software for purchase of e-standards. If it does, then it's under the scope of royalty and subject to withholding tax. But if it doesn't, then obviously it's not royalty and no withholding tax. So you got to fall back to that, yeah. And in terms of service tax, yeah, we know that there's now digital service tax if you purchase a digital service. So if you're buying these e-standards, and if this e-standards is actually a digital service of which you can just download or purchase this e-standard automatically via the internet, that is actually called a digital service already. And yes, that will be subject to the digital service tax already. Yeah.
Okay, thank you very much, Zen. I've just been told that we have time. We will make time for one more question because it seems pretty important. For a Sendirian Berhad, is it a must-have? Is it a must-have to have a different individual for accountant and tax agent? How about the case for sole proprietors or partnerships?
Maybe we should hear from Mr. Chin and Miss Ili, from the business point of view. Or do you think it's a must to have an accountant?
I thought it's not a requirement to have a fixed one. You don't have to. Only the Sendirian Berhad are required. It's my understanding. Of course, I leave it to the professionals to answer.
I think it's best we engage a professional like Zen. I mean, it will make our life easier. And like Mr. Chin said, as an entrepreneur, your focus is to actually grow the company, get more clients, more sales, and leave the other things to the experts. Yeah. But of course, it comes with a cost, certain cost. So you have to do some calculations about it. Yeah.
I think the cost now is getting lower compared to many years back. You can negotiate with them. Now pandemic, no money to pay you. Then they'll be really happy to help, do some charity.
All right. Now, maybe I'll just address this a little bit. Now, for Sendirian Berhad, Sendirian Berhad would definitely need, certain external parties like company secretary. You definitely need a company secretary for Sendirian Berhad. You need an external auditor to audit your account, unless your Sendirian Berhad is exempted from audit. Yeah. Otherwise, you need an auditor. But when it comes to tax agent, now I must be very honest, even though I'm a tax agent, it's not a must to have a tax agent, but I would strongly encourage you to get a tax agent because, if you do not know the tax rules, the tax treatment, then you may do things wrongly. Yeah, but a must is secretary, company secretary, and an auditor, an external auditor. Yeah, but a tax agent is definitely encouraged, even though some companies actually do their tax on their own. But when it comes to sole proprietorship or partnership, well, you do not need a company secretary, you do not need an auditor. Well, tax agent, well, again, if you want to make things right, you want to be very sure that the tax treatment is correct, get a tax agent. Otherwise, if you want to do it on your own, well, if you're very well-versed, you can. But of course, I will encourage you to get a tax agent. Yeah.
Yeah, most definitely. Well, thank you very much for that, Zen. Thank you to our speakers. Before we head on to the closing of our show, we did have our survey earlier. So if the team could bring that up right now, what is the final poll results? There we go. Oh, Zen,
wow.
You would be so proud.
I like that. I really like that. When you receive a tax audit letter, look for the tax agent. Ask if I'm in trouble. I like that.
Yeah, no, I think that is a very safe answer.
Yeah, true. It is kind of cheating a bit. That was the safest answer. Yeah. All right, fantastic. What do you guys think of the answer? Expected, pretty expected, actually, pretty standard. All right, that was fun to do. Now, thank you once again to all our viewers for your questions. I'm sorry we couldn't get to them live at the live session, but like I said, Malaysia Kini will actually get back to you on your questions. Now, I've absolutely loved hosting these 3 episodes so far, and today is the finals already. I do hope that you've enjoyed and learned a lot as well. We've covered crucial topics from handling a corporate tax audit, transfer pricing, and today we focus more on navigating through corporate tax audit issues. Now, with some really big names, we've got some big guns joining us today as well, and some highly experienced guests so far, this 3-episode series has been a real eye-opener, and it's been really fun learning for me as well. Mr. Chin, what do you think about this series so far?
I think it's a great event that lets more people to understand about tax, and as well, this is important because a lot of ignorance out there, especially the SMEs. To be frank, they just don't care, and the attitude will be different. Like I say again, they all thought it is, it can resolve when it comes. but they don't know when really comes, then they got panic, and then that's where they fall. And then they start engaging third party, whoever knows the income tax officer to team all the stuff. This is wrong, and why don't you get it right from the beginning? So this is the main thing to do. Engage a good tax consultant, but of course, costs must be very cheap for SMEs.
Okay, thank you, Mr. Chin, for the tip. What about you, Miss Illy? You enjoy yourself today so far?
Yes, I enjoyed, and I think if you notice, there's a lot of questions coming from myself as well.
Yeah.
So basically, that shows that this session is actually very beneficial and is a platform where a lot of SME can learn more about what they should know. As being an entrepreneur, all the do's and don'ts. Some of them are actually ignorant about the law, but it's a no excuse thing. They have to learn, and yeah, through this session like this, I think it's a very good, and I hope, this session will continue.
Me too. Now, Zen, our tax guru for our 3-episode series, are you happy with the interaction from the audience and our guest speakers? Are you a little bit sad that, today is the end of the series? What are your thoughts?
Well, absolutely delighted, and I think from all these 3 episodes, I think that, we have shared so many things with the audience, and I hope that all this sharing really do help the audience, to actually to at least increase the knowledge of it, about tax, and like I always say that tax is not something so easy to understand, and we understand practical tax advice is very hard to get. You may sometimes go to your accountant and ask them on some tax treatment, and they may not be able to even give you a very firm answer. And you know what? Because of that, because we know practical tax advice is hard to get, we actually started this thing called TaxPod. Now, what's TaxPod? Tax Professionals on Demand, which is a platform. It's a platform where people can access to decades of our tax saving knowledge. We actually put up videos, we put up a lot of updates, in this TaxPod platform, and you can actually access to them and actually gain knowledge from this TaxPod. So, and not just that, we have actually launched this just recently, and we now have a special offer just for Malaysia Kini viewers. For Malaysia Kini viewers, we have a special offer for you all. You just have to go to the comment box, look at the link, click on the link, register interest, and you will find out, what kind of special offer that we are giving you. So if you're interested to really know more, learn more about tax, that is something that you must really look at.
Thank you so much, Zen, and thank you to our speakers for our great discussion for today. So SME and business owners who are having issues related to tax, I really hope that this show gives you some insight and clarification as well. It's time to wrap up the final series of Tax Made Easy. I'm your host, Amanda Andrea, and see you all really, really soon. Have a great day. Do stay safe, and thank you for watching. Bye.
Bye-bye.
Bye.
YYC Group was established in 1974, founded by Mr. Seong and his wife. Initially, our office was located at Pudu, Kuala Lumpur. In early 2018, YYC HQ officially relocated to a 5-story building, having more than 800 employees. Currently, YYC operates with branches across KL, Selangor, Johor, and Penang. In 2019, they have also entered the Singapore market. YYC's business philosophy and excellent performance successfully catch the attention of OCBC Bank to invest and become the strategic partner.
为了把 YYC 推上另外一个高峰，我选择不在手，而是转型。对我来讲，转型就是不断的学习，不断的创新，带更好的元素进来自己的公司，然后把公司做得更好、更强。
YYC Group providing one-stop solution of professional services including accounting, tax, audit, business school, business advisory, etc. Through innovative transformation, we have trained more than 100,000 business owners and widely recognized by entrepreneurs from many industries. Today, YYC has over 20,000 clients.
YYC 不是只是一个会计公司，我们是一个企业医生。Your success is our success.
Yes, you